Hi everyone, Dan Gemus here with the Dan Gemus team, and in this week's Ask the Experts segment, we talk about mortgage pre-approvals, and we have with us Kevin Martin. He's a mortgage specialist with the Lucier RBC mortgage team. We'll talk to him next. Welcome back, everyone. So today we have Kevin with us, and Kevin is the mortgage specialist with the Lucier RBC mortgage team. And there's some changes coming up January 1st, 2018.
Yeah, you got it, Dan. As of January 1st, the big changes are coming for individuals that are looking to put 20% down or more on their home. Okay. So a mortgage that's not default insured. And the changes really is that the government's going to set a qualifying rate for these individuals. And this qualifying rate is going to be approximately 2% above the rate that the client will actually receive.
Sure.
And what this does is it makes sure that not only are we preparing people for home ownership now, but when it comes time for renewal, that there's in a raising rate environment, that they're still going to be able to afford their mortgage payment then. So it's actually a very wise move, and it's something I'm glad to see.
First of all, so what was happening beforehand? So before this change, what was standard?
People were getting approved based on the rate in which they were offered.
Okay.
So for example, if the rate on a 5-year mortgage was at 4.99,
yep,
they would maybe receive somewhere closer to maybe 3.4, for example, and we would approve them based on 3.4. What would happen is they would come up for renewal, rates are up, and the payments wouldn't be as manageable as it was when they bought the home.
People don't often understand that they get a discounted rate typically, right?
Yes.
When they get a mortgage, and they don't really understand that. So they'll see mortgage rates posted at whatever, 5% or 4.99. And they don't realize that they get a discounted rate.
Yes, right? Yeah, it's virtually never when anyone receives the posted rate.
Sure.
There's always discounted rates. It can sometimes depend on the relationship, the size of the mortgage, things like that, but more often not in today's environment, the discount's pretty standard to what applies to all mortgages.
Okay.
Make things a little bit more fair.
No doubt. So just doing some real math, give us an example of what that would mean dollar-wise for the average buyer out there. Any idea?
Yeah, it does. So for someone today in December that were to apply for a home, let's say they were pre-approved for $200,000,
sure,
and that same person applies in the spring, they'd be looking closer to about $170. So it has affected their purchasing power. But it's a good thing because it's ensured we're putting someone in a home that they can afford now and the future.
I'm thinking it's going to affect those in the larger markets, the Torontos, the Vancouvers more so, right? They're those $1 million properties.
That's where it's going to take a major hit, yes,
No doubt.
Absolutely. It will affect us here, but not quite to the level of those big cities.
Kevin, great information. Thank you as always.
My pleasure.
It's Kevin Martin with RBC, and lots of great information. Make sure you go to our website and click on the Ask the Experts page, and we have lots of great information there. If you have any ideas for future Ask the Experts segments, give us a shout. We'd love to hear them from you. See you next time.